Up and down, like a child playing a game of yo-yo, Russia's economy has experienced its fair share of economic highs and lows, but it only got unimaginably worse in 2022. In March 2022, after its illegal and brutal invasion of Ukraine, Russia was hit by a triple trauma: a financial shock, a trade shock, and an uncertainty shock. Watch this video to discover the woes Russia's economy has faced. Over the years, the Russian economy has proven to be volatile. Since 1989, its economy has transformed from a socialist command economy to a capitalistic market system. Also, its industrial structure dramatically drifted away from heavy investment in manufacturing and agriculture to market services, oil, gas, and mining. Upon the transition to capitalism, corrupt privatization processes began which converted major state-owned firms to private enterprises. In that period, majority of state enterprises were privatized amid great controversy and subsequently became owned by politicians for far less than they were actually worth. For example, the director of a factory under the socialist command would become the owner of the same factory when capitalism became instituted. Aside from that, outrageous financial manipulations were performed that enriched a small group of individuals. Many of them promptly invested their newfound wealth abroad, producing an enormous capital flight. This rapid privatization of public assets and the widespread corruption associated with it all happened under the government's watch and became known throughout Russia as grab-itization. This led to a rapid collapse of the economy associated with widespread borrowing to finance budget deficit. In fact, in the 1990s, Russia was notorious for being the largest borrower from the International Monetary Fund, with loans totaling a whopping sum of $20 billion. All these events resulted in the 1998 Russian financial crisis. In the 2000s, significant pro-growth economic reforms to deliver the economy from crisis were implemented. The reforms included a tax reform, which introduced a flat income tax of 13%, and a broad effort at deregulation which benefited small and medium-sized enterprises. Between 2000 and 2008, the Russian economy got a major boost from rising commodity prices. GDP grew on average 7% per year. Disposable incomes more than doubled, and in dollar-denominated terms increased by eightfold. Also, the volume of consumer credit between 2000 and 2006 increased 45 times, fueling a boom in private consumption. To further attest to the effectiveness of these reforms, it was discovered that the number of people living below the poverty line in Russia declined from 30% in 2000 to 14% in 2008. Impressively, in 2007, the World Bank declared that the Russian economy achieved unprecedented macroeconomic stability, and the Russian government hoped it would remain that way. But it didn't take long before Russia's economy came crashing down again. In 2008, Russian banks were hit by the global credit crunch, although no long-term damage was done. Yet, a sharp but brief recession followed. In that period, skillful and timely actions by the central bank, heavy export revenues, and widely increased public spending helped the Russian economy against the impacts of a full-blown crisis. From 2009, Russia enjoyed a booming economy. But in the wake of the war with Ukraine, the economy came crashing. At the emergence of the Russian-Ukrainian War, the international community, particularly the U.S., placed a number of bans and sanctions on Russia after they turned down the plea to stop the war. These sanctions began in 2022. However, in 2023, sanctions continue to hurt Russia's economy. Since then, businesses have had to adjust to using inferior resources or paying higher prices for the right quality. Now, Russia's financial markets and many other sectors of the economy have to cope without foreign partners, making more companies shift from high-tech to low-tech. Is the Russian economy in recession? Even though the sanctions have had a significant impact on the Russian economy, the impact has proven to be mild when compared with the world's expectations. The economy fell by 2.1% in 2022, which is much less than the predictions of 5 to 6% made in the spring. This fall in GDP was savaged by the high oil and gas prices, which brought in good profits. Also, revenues from hydrocarbon production and exports increased by 28% compared with 2021, and high inflation in the first half of 2022 led to an increase in nominal revenues from taxes. Notably, a more severe blow to the Russian economy came from the moral sanctions. Since the war, one of the penalties Russia has had to face is the withdrawal of foreign companies from Russia. The most significant effect was the shutdown of automobile plants, which belonged to international companies. As a result, the production of new cars in Russia fell threefold, and sales by 59%. Also, the manufacturing industry in the Kaluga and Kaliningrad regions, where such plants were concentrated, shrunk by 20%. From the look of things, this period of sanctions and economic downturn will lead to a continued trend of stagnation in the Russian economy. But the IMF had something else to say. Recently, the head of the International Monetary Fund, Kristalina Georgieva, predicted that sanctions on Russia would have some devastating effects on its economy, saying that it would shrink by at least 7%. This statement came as a surprise, considering that the IMF recalibrated its Russian GDP forecast for 2023 in January, saying the body expected it to grow by 0.3%, instead of falling by a further 2.3%. Of course, it's a stretch to say Russia will experience any growth, because, well, you don't expect a country that is struggling under such heavy sanctions and is still spending up to 10% of its GDP to fuel its war effort to boast of any such statistics. This optimistic view concerning the stability of Russia's economy has led to a worldwide uproar. The general public did not accept the IMF's forecast, especially considering the fact that other international institutions kept their forecasts the same, a 3 to 4% drop in GDP in 2023. Now, analysts can be roughly split into two camps. The first group believes that even if the Russian economy is not torn to shreds, it is still undergoing a major crisis. They also believe that a collapse was only averted because of the efforts made by technocrats in the Russian government and the sluggishness of the West to issue a sanction, saying that it is only a matter of time before Russia's economy hits rock bottom. The other camp, the skeptics, maintain that sanctions do not work. These ones are of the opinion that if the Russian economy is yet to be destroyed after a year of heavy sanctions and still somehow manages to pay the ever-growing expenses of the war, then sanctions are of no serious effect. According to them, Vladimir Putin's regime is as strong as ever, while sanctions have turned out to be weaker than market middlemen and the potential beneficiaries of the restrictions, namely India and China. This point of view has gained traction in the last few months and attracted a response. But of course, the sanctions are working. For instance, Russia's budget deficit in the first 2 months of 2023 reached an unimaginable high of 88% of the total deficit planned for the year. At that occurrence, it was thought that the new formula for calculating oil and gas taxes and some major businesses would improve the situation to an extent. But even cautious estimates say that the deficit will swell to 6 trillion rubles, which is about 68 billion euros. A very unfortunate turn of events and very unlike the previous year. 2022 brought about record-high windfall gains from selling oil and gas. But as it appears, 2023 will be a year of shrinking exports. Currently, the country is pursuing regressive import substitution, a policy that rolls back production to the level of technologies used 20, 30 years ago, while consumers are offered outdated goods for higher prices to substitute for the lost imports. But does it mean that the IMF's forecast about Russia experiencing economic growth in the midst of the war will not come true? Well, there are a number of things to consider. Firstly, the 0.3% GDP growth can be ushered in through public spending. More so, arms production can continue even while consumption is deeply in the red. Secondly, even if the economy shrinks by a few percentage points, it will not lead the West closer to their goal, which is Russia's military defeat. While consumption has been at an all-time high, it doesn't seem like Russia will back out of the war anytime soon. It is also important to note that the Russian economy has not even moved to the mobilization stage and largely still functions according to the old quasi-market rules. Yet, this does not mean that sanctions are pointless. They do work, and their effect is very noticeable. But at the same time, it is not the IMF's fault that the Russian economy is still afloat. There you have it, the woes of Russia's economy. Since there are different stances on this topic, we will love to know what you think in the comments. Also, do give up a thumbs up while you subscribe to this channel. See you next time.